Today, all of the financial elite, the who's who, they all met up to discuss what the future of finance will be for us. And Jerome Powell gave us a little warning. There will be pain. We'll discuss that today right here on Pour Over Finance. So today, the who's who of the financial world met up to discuss finance, play golf, go hiking, have a good time while we all sit to wait and hear what they have to say, because you know it's going to change everything for us here at this level. In any case, we'll discuss what took place and we'll discuss speculation, hopefully be able to discuss what we might expect in the future. But let's jump right in. We'll start by just looking at what is taking place in some of the markets that we care about. The crypto market is one that I personally care about the most. I do have some stock investments as well, but crypto is kind of more exciting. I see it as a way for me at the low level to get some growth, maybe be one of the big guys one day, who knows. But in any case, what took place today, what Jerome Powell had to say about there might be some pain on the way, it affected the financial markets. Right now, we're seeing Bitcoin at 20,166, which means that it's down about 6.4% from where it stood yesterday. As you can see, at its bottom, it got to about $20,121. And there's a good chance that we're going to see this go even low. There's a lot of speculation that Bitcoin can go as low as 10K. I don't know if we're going to see those levels take place. Is it going to be a result of what is being discussed with the potential pain that's on the way? We'll have to wait and find out. But what Jerome Powell had to say definitely affected the crypto market. It definitely affected the stock market. The S&P 500 is currently down approximately 3.3% as of that meeting. So we'll just have to wait and see what happens. And over time, with this pain that's expected, with potential recession just becoming even more aggressive, all of these markets are going to be affected. And there's really nothing we can do about it because of all the money printing. We're currently feeling the effects. So we'll just jump right into the article that I was reading today from CNBC. They kind of gave us a little bit of a summary of what was said during this meeting. So it goes on to say, Powell warns of some pain ahead as the Fed fights to bring down inflation. This is truly what's happening. Fed Chairman Jerome Powell on Friday pledged that the central bank will use our tools forcefully to attack inflation that is still running near its highest level in more than 40 years. As you know, as of the last report, inflation was at 8.6%, which is extremely high. That's extremely high inflation. So his goal is to fight this inflation and bring it down to more respectable levels. We'll continue. In his annual Jackson Hole, Wyoming policy speech, Powell added that higher interest rates likely will persist for some time. The historical record cautions strongly against prematurely loosening policy. So what this means is that we've been seeing either 5 basis points or 0.75 basis point increases. Does that mean that he may go all the way up to a full 1.0% interest rate increase? We have no idea. The fact that he's saying that they're looking to aggressively attack this, it's possible, but analysts are saying instead of 0.5%, we may see continuous 0.75% increases. We'll have to wait and see in the month of September where things lie. We'll continue. The remarks come amid signs that inflation may have peaked, but is not showing any marked signs of decline. Powell said the Fed will not be swayed by a month or two of data. So a month or two of data isn't really going to make any real changes for him. He's looking for what's taking place in the long term. And as this article has mentioned here, it did peak, at least we hope so, because next report, we might be above the 9.1% that we saw earlier in the summer. We'll continue. Even with a series of 4 consecutive interest rate increases totaling 2.25 percentage points, Powell said this is no place to stop or pause. So again, analysts are currently speculating that we could see it go as high as 4.25% as he continues to raise interest rates in an attempt to fight the current rate of inflation. Again, this is something that is all speculation. We'll have to wait and see where things go, but I think that is a potential. There's no way that he's going to be able to do smaller changes and see true changes in terms of inflation. At 8.6%, that's aggressively high. So in order to beat such high inflation rates, you have to get a bit more aggressive with slowing the economy down. Hopefully it doesn't slow it down to the point where we are in a deep recession, but he's playing with fire here. Let's continue. Stocks fell after the Powell speech, with the Dow Jones Industrial Average off more than 500 points. Big drop. The remarks come amid signs that inflation may have peaked but is not showing any marked signs of decline, as we've already discussed. It's slowing down a bit, but there's not any real change happening here. 8.6%, it's not as if what he's done has dropped things to, say, 5%. No, we're still aggressively high. So the changes that he's making has shown some difference, but it's nothing that's even making any difference. I mean, if you go out to the supermarket today, those prices haven't changed. If you go to the pump, the prices have not changed much. So these changes that he's making in terms of the basis point increases, it's not aggressive enough to make any real difference for our day-to-day spending. Anyway, it goes on. Housing in particular is falling off rapidly, and economists expect that a huge surge in hiring over the past year and a half is likely to cool. This is something that Powell mentioned. In terms of the amount of growth we've seen in the job market, we're probably going to see that cooling, and we'll watch a video that he actually mentions that there's going to be some pain, not just for the average Joe, but for businesses. And, if businesses are going to feel pain, what's going to happen? They're going to have to tighten their books. And when they tighten their books, that means people get laid off. People lose their jobs. So this is the cooling that it's speaking of. Again, this is something we'll have to wait and see. Nothing is happening in the current, but as time goes on and as these changes happen, we'll start to see all of the differences that will be a almost ripple effect to the changes that he intends on making. Goes on, however, Powell cautioned that the Fed's focus is broader than a month or two of data, which we mentioned. He's not looking at just a month or two. He's going for what is going to take place in the long term. And it will continue pushing ahead until inflation moves down closer to 2% long range. We're not seeing anything near 2% in terms of inflation anytime soon. My personal prediction, 1 to 2 years. I don't expect this to happen in the next 6 months. It took a long time for us to get here, and it's going to take a long time for us to get back to where we need to be. And the period in between then and now, there's going to be, as he mentioned, a lot of pain. All right. So with that being said, the article goes on to mention history and, what we've seen take place in the 70s and so forth. But we'll leave this article and we'll jump right in to video of the actual meeting that took place, and we'll listen to a bit of what Powell had to say, and we'll react to it because it's really not looking good for our economy right now. He's not saying it, but it's quite obvious that we are in a recession. He's just not using those words. I don't know when they're going to actually just fess up and say it, but let's listen to him. Let's listen to Powell. Let me just lower my volume here a bit. And
restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth.
A sustained period of below-trend growth. So our economy is not going to be growing is basically what he's saying. And when you have 2 quarters of zero growth, that's a recession. I don't know why they won't say it, but let's continue to listen to the man. Well, not zero growth, but negative growth. let's continue.
Moreover, there will very likely be some softening of labor market conditions.
There will be some softening of labor markets. Businesses are going to be affected. Employees of businesses are going to be affected. And we'll have to just wait to see how affected it will be.
While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses.
I hope you guys have been holding on to some liquid cash, because this type of news means that we could potentially see the housing market take a deep decline. That means we can see businesses taking deep decline. That means we may see more layoffs. That means a lot more joblessness might be on the way. I don't really know what this means in the future, but it's being said now. So just take heed that what he's saying today, within the next 6 months to 1 year, we're going to start feeling the effects.
These are the unfortunate costs of reducing inflation.
Unfortunate costs. And you better believe that this isn't going to affect him. This is affecting the common man. This is affecting you and I. That's who's affected by this.
But a failure to restore price stability would mean far greater pain. Restoring price.
And he says that a failure to restore stability would mean greater pain. And I agree. We cannot continue on the path that we currently are on, where we continuously see the decline of the economy, the path where we continuously see inflation continuing to just grow. This is not going to be good in the long term. So he's going to have to do what he has to do in order to reduce inflation. And unfortunately, he has to slow the economy some in order for that to happen. What that means for us in the long term, I don't know. Like I said, personally, I believe that for the remainder of 2022 and for all of 2023, we're probably going to see the effects of everything that took place in 2020 and 2021 with the printing of money. So for the next at least year and a half, it's not going to be good, which is why he said that there's going to be some pain. I don't know what this is going to look like for businesses. I don't know what this is going to look like for households, but one can only speculate that that means that people are potentially going to be losing their jobs. Businesses are probably going to close, and we may potentially see a few crashes in some markets, maybe the crypto market, maybe the stock market. This is all potential because of the slowing economy and his raising of interest rates in order to stave off inflation. But that's what's happening today. That's what took place in this meeting. I'd like to know what you guys personally think. What do you think will happen? Are you prepared for this? How do you feel about all of this? Let us know in the comments below. I am Aaron. This is Pour Over Finance, and we'd like to thank you for watching this video. If you did get some value from this, please go ahead and hit the like button. Hit subscribe if you want to see more of what we do here. And if you would like to be notified of when we're uploading new content, hit that notification bell. We appreciate you all, and thanks for watching. As always, peace.